All right, what's up, guys? Hope you're all doing well. I'm feeling like shit. That's why I didn't make any daily recaps or case studies lately. I have this fever and it's just killing me. I'm still sick. Sorry. Um, but yeah, I love talking about charts, love doing analysis. So therefore, I'm just gonna discuss the some trades, two trades actually, or three trades. In this area, it was Wednesday. I took the last one. Ended up taking profits around here while my actual target was here. But yeah, so let's go about it. Let's just break it down. Wait, are we on the high time frame? Don't mind me if I'm making these nasty noises. I'm trying to trying not to, but yeah. Over here was all right. So we had this structure. We had the low, high, higher low, higher high, higher low. And then as you can see on the lower time frame, let's just mark it out. You get the internal range structure, the internal structure, the more minor structure, so to say. You get a high, a low, a lower high, a lower low, which is followed by this bullish break. So this is what we call structure realignment, realignment, where the minor structure is realigning with our major structure. Therefore, I was either looking for shorts above this high or longs from the discount of this realigned minor structure. Right. All right. I think I was also looking for shorts above here just because of all the liquidity to the downside. Yeah. And I think, yeah, this was a previous daily high as well. So therefore, I was also favoring shorts, but we're going to discuss the long trade. So there you go. All right. So what can we see on the high time frame? Or let's go on the 4 hour. We can see that the trade worked out. That's one thing for sure. But I was look at this impulse down, and this is quite correctional. That's another reason why I was favoring shorts as well. Well, not favoring, but looking at shorts as well as longs. So yeah. Um, that's price behavior wise though. But as you can see, this is 6 a.m. candle. It's quite indecisive, not really showing a strong bearish hands, neither bullish hands. Same with this one. Though it's a bearish candle, not showing strong bearish intent like this one. Going lower, same story. Also, this is aftermarket in Asia, so therefore it's quite correctional. Forming Asia highs been taken. London pushes down, pre-New York slowdown. And we can see on the 1 hour after we came into the discount and took our first part of internal range liquidity over here. These are Asia lows. Asia lows been taken. First bit of internal range liquidity been taken, and we can see that price starts to slow down. And what actually happens, because we got some more internal range liquidity over here. So we turned bullish on this one, on that internal range, and then we still have this one. We got a low or high, a low, lower high, and a lower low. However, we can look for longs and expect this one to break just because both structures, both major structures are realigned for longs, if that makes sense. So yes, you could wait for the all the way for this all to break down or to break bullish and then look for longs, but you have to take some risk. You can't just you can wait, but you won't find that many trades. You can actually and there's no need to wait that long. So yeah, we had that bearish one as well. So clean high this. Why? Because it took the internal range liquidity and then broke bearish. So clean. All right. So coming into this 50-minute POI, going lower. can we see? First of all, we get the slowdown over here. This is our set of early buyers. Why? It's a liquidity grab, yeah, but it's also set of early buyers. Why we get the highs that lead to new lows. If anything, you could maybe class it as when not taking into account the range, you get a high, a low, a lower high, a low, bullish break, bearish break. So yeah, early buyers on the 5 minute. And then going lower to the 1 minute. Can we see over here? Get clean structure being formed. And this is where I made my mistake, because I have this rule where I'm not allowed to enter before 12:30. That's over here. Let's make it a little bit thicker or darker and thicker. So I'm not allowed to enter a trade before this time. But I didn't listen to myself. So what do we have over here? We got a high, a low, lower high, lower low, lower high, lower low, and on the FXCM feed, this is far as to come. This broke below, so actually it would be like this: lower high, lower low, but that didn't happen on Forex to come. Therefore, we didn't look for trade yet, and we can see some form of early buyers here as well, but more minor. I think it was this one. This one. Sorry. Why we got a internal low, high, higher low, higher high, lower low, lower high, lower low, and then some form of some minor bullish break here. So that's just some minor early sellers, if you want to call it like that, but you could class them. But we have some strong early buyers, and we have some strong early buys here as well. So the setup is valid. Then what can we see? Bullish break, building up some nice liquidity here. And then this was the last 1 minute order block. So I was like, all right, let's get it. Why not enter there? And I entered before my entry time. I couldn't wait 8 minutes. Better miss. All right, I took it for the 2 minute, I think. Yeah. I took it like this. I couldn't wait. This idiot. 17, 12. And it resulted in a loss. So yeah, that happened. And range got respected, as you can see. So then we come into my trading time. This was the loss. We come into my trading time. Bullish break. Oh. Bullish break. Internal range liquidity taken. Reacting from some second thing. Then bearish bullish break again. So we got all the confluences for the first trade, meaning we can look for a continuation trade on the second leg. All confluences for the first trade, meaning that this is the extreme trade. It had all confluences, so this trade can just be a continuation trade. However, I think I made the mistake here as well. No, I didn't. I had my stop loss over here below the 50%. Then this range got created from this low to this high. Yeah. And I was like, yeah, there's this block, but doesn't say any discount. And I don't feel comfortable taking wick entries. Yeah, they fit my plan, but just struggle with 3 minute? No, 1 minute. 1 minute wick. I'm 100% sure. Yeah, there you go. And therefore, I didn't take the trade. I failed to enter. So this is where my thinking probabilities failed. But you can see like this to 50%. So what I would do is put it on there, and then my stop below this wick, 3.54, and look for a long, and it just hits 1 to 5. So that's clean, and then it comes back to entry. So yeah, I missed that. Got annoyed again. And then I went to bed because just fever is insane. It's not a small thing. I don't know what it is, but it's killing me. Today is a bit better though. I can talk more. Yesterday I couldn't talk. It hurt so much to talk. Now it's a bit better. So then I was like, okay, I went to bed and I was like, bro, why are you in bed? You have to be there. This is you want to do this. You want to be profitable. You want to be a trader. You got to be at your desk, right? So I was like, okay, if it comes back, I'll jump up and go to my laptop and place a trade because it fits the plan. So one thing I could have done is take the continuation trade, which would have been a direct entry. And it would have been like this, 3.4, 3.9, and then taking the breathing room, probably 2-minute block would have been better. Oh, that's the same. So 0.5 now instead of 0.3, 77, maybe 80. Just give it some extra room. And then this would have been a trade. But I didn't. Why didn't I? Because I said we have this internal range of liquidity, internal structure over here. Oh, wrong one. And that's this one. We got a high, a low, lower high, and a lower low. And this would have been my potential lower high. This was the buildup of internal range liquidity. Same over here. Plus this is some internal range liquidity. Let's remove this one. As you can see, but we still had this over here. But I was like, okay, yeah, I'm not sure. I'd rather wait for confirmation-based entry. So I did that, and what happened? We got more structure going on. We got clean early buyers. Why? High, low, lower high, lower low, bullish break. High that leads to a low, bullish break. They get taken out. So this is like where you can enter already, just from the 5-minute block, because you get your early buyers. It's sort of confirmation that this is a strong block as well. Still wanted to implement that later in my strategy where I take 2 trades in one area, one based like this. So risking half on this entire block and then waiting for a confirmation-based entry and risk the other half on that confirmation-based entry. But anyway, so that happened, and then we get the minor break over here. Every block is mitigated. And there you go. And I sniped this one with manual entry at 90. There you go. 4.6. I think I just put it like this. And first target was here. Took 80% off above this high. And the rest I took off at 1 to 5.2 over here because I was impatient. Because my overall target, as I said, oh wait, hold up. So after we broke bullish again over here, I reduced my stop loss. So I was marking on like that. Reduce. So there I reduced my stop loss. Where did my stop loss go? 0.5 pips below this low. So this is 90, 85. Stop loss. So that's been taken care of, almost risk-free. But one thing sure, risk is reduced. So let's just play it out. Let it play out. Well, I didn't completely. Why? Is this what it should have been? Should not have been my first target. My first target should have been this high and 1 to 5, because we knew that this was gonna break, and if this breaks, it means like, okay, we're holding on to the more major range. So therefore, 1 to 5 should have been my first target, and not this one. But I'm a bit fearful with giving back to the market. So mistake, but profit secured, 80% taken off, and then the rest I took off over here. That's all right. And overall, the trade played out to my target. These equalize in this high, and it's a 1 to 10, I think. 1 to 9 something. 1 to 9.8. So yeah, but I closed it over here. So yeah, 3 trades over here, 1 loss off plan, 1 missed, failed mindset, failed psychology, and then 1 clean trade taken, but failed to hold. Still banged, risking a risk 0.6, I think. Yeah, because I lost this one and I had slippage in this one. I risked 0.6 over here and I banged 2.4%, I think. That's decent. That's good. That's 5%, right? That's 0.6 times 5. No. So I banked if I risk 1%, I would have been 4% back. That's clean, that's good. So yeah, that's the trade. This is the case study. Overall, could have maybe hold it. So that's one thing I did as well. After we broke above here, I moved my stop loss below this low. Oh, actually, let's just move this one below that low. And what I could have done maybe is, well, if I would hold the trade, all 3 structures now lining up, I could have targeted this high and it would have been a 1 to 11. All right, this was the case study. Peace out.